Welcome back to the Aria Finance podcast. It's the specialist scoop, and I am delighted to be joined today by royalty in the industry, the property tax queen herself, Amy Richardson. Thank you for coming.
You're very welcome.
All the way from the glorious Midlands as well, the beating heart of the country. A shared sense of loyalty there. Same sort of journey in this morning. How, Amy, talk us through a little bit about you and your background and how you got into accountancy and tax advice for landlords.
Okay, so I started out in accountancy literally when I left school. So I remember going to the careers office and they said, you can do this course, and this course. And it was like hair and beauty, psychology or whatever it was, social. And there was a finance bit. So I really loved maths and business studies. So I came out with accountancy.
And did that literally happen in an actual careers fair, or did you sort of grow up thinking, I want to be in the numbers, professional sort of white collar, mathematics based environment?
Yes, I think because of my upbringing, I always wanted a career because I wanted a job that would provide a certain lifestyle that I didn't particularly have. So I was quite driven to make sure that I had a qualification behind me in order to get what I wanted. So that's how that started. So I went into loads of apprenticeships, literally straight out of school.
Yeah.
My birthday's in August, so I literally went in 15, did all the apprenticeships, got my qualification. I did AAT and then ACA.
Yeah.
And then was chartered by 21.
Wow.
Yeah.
Wow. Always with a property focus?
No.
No.
So I started out in small practices. So literally I was being thrown bags of receipts. And when, the back in the day, it makes me sound so old, but back in the day, you were, as a junior, you were thrown the bag of receipts and told, type these up into a spreadsheet. And that's how it all starts. And I made loads of really bad cup of teas as well.
Yeah.
I used to work for one of the largest UK accountancy firms, and they put me into the tax world. Now, at the time, I was only 17, and I was partway through my first set of exams. And they were like, oh, we want you to do the chartered exams for tax. We want you to do this. And I was like, hell no, tax is so boring. I want to be an accountant. I want to do this. Like, I was really, struck on that. So it's actually hilarious that it's gone full circle. And now I've ended up doing tax full time.
But it's funny that also what's really clear for anyone that's seen you online, which will be a lot of people, you're very passionate about it. Yeah. So at what point did the penny drop where all of a sudden that became a thing that you love and a thing that you where that passion was built from?
So actually it's when I had my second child, and it wasn't really just I woke up one day and thought, oh, I'm going to do this tax business. I was in a position where I knew I needed to provide a bit more for my family. So I was in a job at the time, quite high up in my career, but the hours were long, the pay was great, but it was like golden handcuffs.
Yeah.
And even the thought of going on maternity, I was like, well, I'm not going to get much of a break. So what else can I do? So I thought about setting up my own business, my own accountancy practice, and I did that. Started out really small, and then I started reading loads of books, and I got to the point where I was like, everyone's saying to niche from a marketing perspective. So I literally sat there and thought, what's the hardest thing I can do? I'm going to do that, because that's probably where the gold mine is in terms of like success.
Yeah.
So I literally went through it all. So I was like, oh, maybe I could do tech startups, because I always wanted a career in the tech space. Yeah,
hot topic as well, right?
Yeah, cool. Let's do that. And then I was like, no, because most of the money comes from funding and this. So that was ruled out. Then there was another one, like online content creators, influencers basically. Yeah. A little bit glamorous, but I thought they'll probably do my head in. It's not going to be worth it. They're not going to be very good at numbers or providing information.
You think you do a lot of hand holding?
Yeah. So I thought, no, I want to be around intellectual people and do something that I've got an interest in as well. And that's how I came to property.
So that's where so it's actually the property stuff is a handful of years old, but you've carved out a real niche for yourself already, and that's grown and grown. Yeah. What, in terms of landlords, because I guess timing wise, you probably got in at a good time in that the market has got a lot more professional in recent times. Have you felt that there's an appetite for property professionals to take this a little bit more seriously?
I think now we're seeing a bit more regulation around it. You have to have a serious mindset around it if you want to make it big in property. So a lot of people will come to me now and they've already done a certain amount of research, which is great. Not too much research. Sometimes, they obviously still need some hand-holding.
Yeah.
But I see a lot more people that are taking education and doing it properly. I don't really come across too many accidental landlords anymore. People I tend to speak to are making that conscious choice of, I want to invest my money, I want to grow my wealth, and I'm going to do this through property investment.
And do you know what? That's good to hear. From my perspective as a broker, it's good to hear that people are coming to you having done a bit of research first, because we get a lot of people come to us either starting the journey or on their sort of growth, ambitious journey for a portfolio where they've said, well, I know I need to put it in a limited company. You said, great. Who have you spoken to for that? No, I just know that I need to do that. You think, oh, right, that's not advice. That's not real. Go and speak to a tax advisor. And I always think there's not as much noise about it as there is other stuff. A lot of the focus is on your refurb strategies and how you make money at the end, not how you set up well at the start. Is it just that when people come to you, are they asking up front limited company or personal name, or do people come with a greater depth of, I don't know, questions and understanding?
I think it depends on the research that they've done, the people that they know. So people are influenced by the people that they surround themselves with.
Yeah.
So I've literally had it where someone's like, I have no idea, Amy. I need your help. This is what's going on.
Yeah.
So they don't even know about a limited company, or they don't know about a holding company or whatever.
Yeah.
And then you've got other people that come to me and they go, I know I need this. Can you just reassure me?
Yeah, okay.
And then I start asking questions, and then it turns out
they were wrong.
Yes.
Yeah. Yeah. Shock horror.
Yeah.
That's an interesting point in itself. And what I was going to ask is, what's one of the main things you see people come to you with, either a ready-made mistake or they were about to make a mistake? What's the one thing people are doing across the board wrong?
They take tax advice from someone who's not an advisor, i.e. potentially someone who's doing a property education course.
Yeah.
So that they will just flatline say, you need this structure.
Sure.
You need an LLP, for example.
Sure.
So someone will come to me and they go, well, I've set up my LLP and I just need you guys to do the accounts and the tax return. And then I sit there and go, okay, so why did you set up an LLP? Do you know why you did that?
Yeah.
And do you know what the tax effects are?
Yeah.
And they're like, because I've told to and everybody else does it. And then you start unraveling it, and 9 times out of 10 they didn't need that.
It's the danger of, and it's sort of a topic on its own really, the property educator stuff. And I'll caveat this at the start by saying there are some phenomenal educators out there who are doing it properly and responsibly, and they take that as a serious career, and it's based on the back of a career in property, which is way easier to respect. And I always think, and not to be controversial, I think there's such a thing as, and it's meant in a positive way, of staying in your lane for where your expertise lies. And the best educators on the market seem at the moment to encourage this, I hate the phrase, but power team, right? Yeah. But they talk about line up a good tax advisor, line up a good mortgage broker, line up a good lettings agency and someone to run your portfolio if you're not ready and established yet. And you sort of go up from there, and that's how you scale properly.
Yeah.
Are you seeing people come to you with the mistakes? You're saying it's from necessarily not bad advice, lazy advice. What are the things that they're being told to do that you disagree with on the whole?
So there's simple things like just set up a limited company, which is fine. It's on a slideshow, obviously, that they've attended a course, whatever. And 9 times out of 10, that will be the right choice for people that do want to make it big in property. But not everyone's got the same circumstances. So that's usually the thing. Or this OpCo, PropCo setup. So they're saying, well, you need to set 2 companies up, but then they actually haven't thought about a holding company. And then the client is unaware that a holding company is actually a company. It needs a set of accounts. And then you've got 3 companies to manage, and then they're like, they haven't got any properties yet. So it's a lot of expense to outlay at the front part of your journey.
Well, when does that change? Because you talk a lot online about layering companies when it's done properly.
Yeah.
What's the sort of point in time on a growth journey that someone should start looking at that or talking about that or thinking about that?
So if you have somebody who has let's say a non-property business, so I don't know, a successful podcasting studio.
Sure.
That's their cash flow in business, and they have excess reserves, excess profit, and they now want to put that profit profit, into property. So having a holding company set up would allow you to do that tax efficiently. If you're doing any JVs, that's also a good indicator that you might need a holding company, specifically if you have more than one JV going on, and also if you're doing multiple strategies at one time. So flips, buy-to-lets, conversions, it wouldn't be ideal to put them all in the same company.
Yeah.
And it's not to say that you can't, it's not to say you have to have a group structure. You don't have to do anything, right? You could have 3 separate companies, but the tax advantages won't be there. So if we're in a group, we can pay dividends up tax-free. If we've got profits over here and losses over there, as long as the shareholding is there where it needs to be, then you can offset those profits and losses together to pay less corporation tax.
Yeah.
And it's that side of things that people aren't aware of.
And that's, at what point are they planning that? Is that ahead of execution or at the point that they're going to start? So you use the example of sort of someone looking to do JVs. I'm a landlord. I own 3 or 4 properties. They're in a limited company, which was the right setup for me and was the right advice. Yeah. I'm now going to do a JV with somebody somewhere in a new SPV. At what point do you start planning for that?
As soon as possible. So when I speak to clients, I always say to them, I need to know your exit. I need to actually know what you're trying to achieve here in order for me to advise you properly as a tax advisor.
Yeah.
So in terms of a group structure, you can do it from day one. That's a different process. And you can do it midway through your journey. So it's not like you have to have this structure from day one. You can come in at a midpoint and put that together. It will just cost you more money and you have to jump through more hoops essentially.
And how complex is that process? Because again, sort of one of the things I see in the market a lot is apathy from landlords, particularly on the way up where their focus is on a refurb project and all their eyes are on raising finance and sorting that. And I think sometimes people are put off from going and getting the right advice for fear of this is going to be loads of work, which is stupid, but is a thing that happens. How difficult is that if people are partnered with the right tax advisor and the right help? How challenging is it to change your company structure midway through your journey or through a project, or how does that look?
It shouldn't be challenging for the client because the tax advisor should be doing all the hard work.
Nice.
So the tax advisor and the lawyers are doing the graft essentially.
Yeah.
So I'm writing to HMRC on your behalf. I'm getting the clearance. I'm speaking to the lawyers on your behalf, and the lawyers are implementing the structure. The only bit of legwork that the client really has to do is when it comes to lending, because if they've got an existing limited company that has properties in there that have mortgages on, finance, then we need consent from the lenders. And there has been times in the past where a client has been with a certain lender and they've not approved of the group structure.
Yeah.
So I always tell a client when they're thinking about doing this structure, before we even sign any documentation, need to check this point.
Yeah.
It's very important.
And these are things that people don't know on their own, right? This is why people get into a mess, because you have to talk to experts. Yeah. Well, that's a good advert for it. What are some of the myths around? So we've talked about some of the mistakes people make, maybe coming in with the wrong advice. What are some of the myths that you hear that people bring to you as a suggestion regularly that are wrong? There must be some consistent ones.
Well, if you've been on my Instagram, you'll know that I've got my own Q&A on that. The classic one of, can I just give this property away for nothing and pay no capital gains tax?
Yeah.
But they get confused between inheritance tax and capital gains tax, because obviously with inheritance tax, you can gift an asset, and if you survive 7 years, then it's outside the realm of inheritance tax. But it doesn't get away from capital gains tax.
Yeah.
So those two taxes go hand in hand, and it's very rare to mitigate both of them at the same time.
So people blur the lines in their own perception, do they?
Yeah,
interesting.
That's a classic one. Another one, going back to holding companies, people, even though I say holding company, they don't understand that it's a limited company in its own right.
Yeah.
I think because in their head they think, it's like a shell, like nothing's really going through there.
Right, okay.
So they don't think that it needs accounts, corporation tax returns,
confirmation statements,
all that kind of stuff, but it does.
Yeah.
So that's another one.
Yeah.
What else? I mean, I've had some people come to me and that they literally think that an LLP is a company.
What's one of the weirdest and wonderful things that you've heard? Something that's properly stopped you in your tracks that you didn't believe someone could actually think? It
still baffles me, selling a house for £1.
Yeah. Thinking that they can just avoid stamp duty and there'll be no ramifications.
Yeah.
Yeah, we see that too.
Yeah, that is like got to be the number one.
And are you seeing that when people are trying to incorporate from personal name into limited companies? Is that the main?
Not so much, because the people have got to that point.
Understand
And done some research. Don't see it that much, but it's more like complete newbies that have maybe in a day job, they've saved up some money, now they want to buy a property, they've heard about a limited company, and they'll even say, well, because I'm buying it in a limited company, do I have to pay stamp duty?
Right.
Yeah. So those are like the extremes of the questions that I get.
Sure.
And then you've got the other end of the spectrum where you've got someone who's doing a title split and they're asking all these intricate questions. So
Yeah.
you get a good mix.
Yeah, that makes sense. In terms of when people are looking to become a landlord, so for brand new entrants to the market, what are sort of it doesn't have to be three, but what are sort of the key 3 bits of advice you would give somebody before starting out? And I don't necessarily mean go and get tax advice. We'll take that as a prerequisite. Yeah. What are some of the things they should be thinking about and have ready as information before they come and get that advice?
They need to know what they want. So many people so often come to me and I ask them the question, well, what are we trying to achieve here?
And how far ahead are you looking there? Because I think even when people hear this, they might think, okay, I'll come ready armed with, well, I want to buy a property or I want to get to 4 properties. That's great. But that's still short term really, isn't it? How far ahead are you looking for a plan there?
The whole shebang, like lifetime, what are we looking to do here? Because if you think about tax, it starts from the moment you're born to the moment that when we die. So we have to think of the whole lifespan of, inheritance tax, for example. That's all, unfortunately, doom and gloom and about passing assets when somebody's passed away. So we need to have that conversation in terms of, well, what are we looking to achieve? What is our main focus? So long term, medium term, and in the next 12 months, and then plan out from there. And that's nothing really to do with tax. That's just to do with, do you know what you want? Because I think you can't get something that you don't know, if that makes sense.
I mean, that adds into the whole, I'm a big advocate for, and I talk about a lot in some of the sort of public speaking we do about the rise of the professional landlord and the benefits that brings, and the benefits from my point of view, from lending and lenders' appetite to support that type of borrower. But it's the same thing where you can't claim to be a professional landlord or ambitious or be in this journey if you don't have an eye on what does it lead to and what does it mean?
Yeah.
People are looking for that 10 grand a month passive income so they can quit their jobs. And that's the easy blanket marketing campaign that's gone out there. But what does that look like? What does it take? And what are the bits and pieces you have to have in the background lined up to make that work as well?
I love asking the question, right? So people say to me, oh yeah, I want X amount, like I want 5 grand a month, for example, or 10 grand a month. And I say, okay, after tax, yeah. Okay, so have you worked out how many properties that you're going to need to get that based on the strategy that you've just told me that you're interested in?
Yeah.
Oh, no, I haven't really thought about that. And then they realise if it's buy-to-let, they need about 30.
Yeah.
And then they go, oh, I might need to do something else.
Yeah.
So I think people just need to be very thorough with what they want. Like, it doesn't have to be completely set in stone, but there needs to be a goal that someone's going after in order for someone like me to help them, because if I don't know what you're trying to achieve, how can I plan for it from a tax perspective? Because what you end up doing will have different tax treatments, essentially.
Yeah, that makes sense. And you want to get it right as well. Yeah. It's only the people who have got these things wrong that learn the true importance of it. It's really easy sometimes. There are things that people hate in business. People hate paying recruitment fees at times because you go, I could do that myself. It's only when you hire on board and it takes you hours and hours and weeks, and then it goes wrong, you think, oh, I wish I got a professional to do that. Yeah. And it's the same with, I think, advice, mortgages, finance, tax, accountancy, all of it. It's the people who've been stung that get it, but you try and get people bought in earlier to see the benefits as well.
I think it's a mindset shift. So people at the start of their journey potentially see tax advice or other professional fees as a cost, not an investment. And I think if you change your mindset from a cost mindset to an investment mindset, then you start to think about things a little bit differently.
Yeah.
Because actually, if I invest, I don't know, £2,000 into tax advice and the structure that's right for me, well, actually, that's going to, pardon the pun, pay dividends in the future when I've saved X, Y, and Z from taking that in the first place. And also having that regular contact with somebody to make sure you're still in the right structure, because life happens. People get married, they get divorced, kids move out, like, you know, they're doing their own thing, and then all of a sudden the structure that you had 10 years ago doesn't work as well. So you need to keep communicating with your advisors as well.
That's great advice. I mean, the adaptability in the private rental sector is one of the biggest strengths of the sector. I think the agility and the way that people deal with mortgage crises and rate rises and all the other regulation changes, but not taking that for granted is good advice, is a good sort of point to make. It's interesting, isn't it? And the people who take this more seriously, for all of the new professional landlords who are new to the space, longevity will be with the people who have set themselves up well. If you're serious about it for 20, 30 years of proper income with an exit plan, the setup now impacts the 20-year position. Yeah,
and I think we did see a lot of people come and go in and out of the market quite quickly when we had the stamp duty holidays, and when the mortgage rates were so low, because it actually allowed, you know, other people to enter the market. And then what I've seen is those people drop out. Then you're just left with the people that probably have a little moan every now and again, because you know, they're not happy with this and that, but they know that long term their goal is to have the portfolio and pass it down, so they, you know, they take the rough with the smooth, essentially. Yeah,
well, the resilience that'll have built anyway, the dregs of 2023 and that whole year and the challenges there, you know, it's character building, right? It does something to people. Yeah, for sure. In terms of borrowers landlords who have set themselves up well, who are trying to take this professionally, what are some of the misconceptions around things that they can claim against their company, that they can use for their properties for tax-free? I think you've said it online as well, but I see it a lot in the tax. I'm doing a business meeting in the south of France, so my holiday's expensible. Right, is that the bit that's a nonsense? So what else do you see that people are getting wrong on that?
Yeah, so the reason there's so much confusion about this is because there's not a list on HMRC to say you can do this and you can't do that. There's just a general principle rule, which is the wholly and exclusively for business rule. So basically, if you buy a laptop and you use it for business, yes, it will be allowed. If you buy an iPad that the kids are going to use, it's not really for work, probably not. So there's just some common sense to it. Like, at the end of the day, we all know stuff that's got dual purpose, like a car. You're going to use it personally. A holiday, if you're going on a holiday to Florida with the kids, it's probably not a business meeting. If you're going to France to go and view properties out there, maybe meet some clients there, that sounds like a business meeting. So that would most likely not be challenged. So it's just using common sense. You know, you do get people trying to put all sorts through.
What have you seen? Give me an example of something ridiculous.
Oh my God, I can't even say.
Oh, there's some bad stuff. Oh no. No.
Well, no.
One for offline.
Exactly. There's people forget that the accountant can see on the bank statement. Like, oh, okay, that's what's going on there then. Hope your wife doesn't find out. So there's been a few scenarios like that. And then also just blatantly taking the mic, or like putting stuff through, like designer handbags. Someone put through...
carrying around documents, obviously.
A Rolex somebody put through. Right. I mean, if it's an investment and it stays on the company balance sheet and stays in the box, it's fine. But, you know, they're out wearing it, so that's not going to work. Just stuff they shouldn't put through. Like,
so what's the flip side of that then? Just in terms of, if there's some good advice for people, what do people sometimes miss that they could be actually registering against the company, saving some tax on, and what are people maybe missing that they shouldn't be?
So a lot of people pay for subscriptions, and they might use a personal credit card if they're doing refurb. So usually what I see is they'll do a refurb, the finance is spread over certain credit cards. Some of them might be in their personal name. They'll forget to put those through when they're actually tax deductible because they relate to the business. So anything like, obviously, mastermind courses and stuff that they can go through majority of the time. Mileage as well, that's a big one. People just don't realise when they're travelling to sites, travelling to clients, whatever it might be, that they can actually claim that back through the business. If they've got a personally owned vehicle, they can absolutely do that. I have actually got a list somewhere which I can send out to the listeners if possible.
People can reach out. We'll get to that. That sounds good. But it's those little things about when, again, it's all circles back to this. What does it take to become a professional landlord and take it seriously?
Yeah.
It's thinking about all the different layers of savings and benefits that are sort of balanced out by the challenges of being a landlord. So you have to take the benefits that are there, right? Because there's so much going against you at times with regulation changes and demands on EPC increases and renters reform bill and all the other tough stuff. Why not set yourself up to be as profitable as possible in a legal and appropriate way?
Absolutely. And the advisor that you pick should be helping you do that. So in my firm, we help the clients do that by telling them, it's year end, send us this, make sure you've done this, and we start asking the questions. The danger is when you're with an advisor that doesn't ask any questions, doesn't offer the check-ins and stuff, that's when there's a danger of missing something because you don't know what you don't know. So as much as I think, landlords can have that layer of professionalism, they shouldn't be 100% reliant on themselves. They should be reliant on, to a certain degree, the advisors that they've got around them, because that's what they're there for in the first place. Yeah,
that makes sense. I mean, if you're going to pay for the service, you expect the right advice and the right service, right?
Yes.
To keep your nose clean and keep you okay. Yeah. In your experience, how does the tax planning journey differ between landlords who've had the early advice and some of the later advice?
Oh, it's a damn sight easier.
Prep is key, right?
Yeah, you need to plan.
Yeah.
You know, if you've got a plan, you've got some chance of making it. If you're going to leave everything to last minute, which I see all the time as well.
Yeah.
Oh, this deal's completing this week. Can we sort this structure out? Well, no, not really. So,
what is the time frame? What's the appropriate time frame to come in before? So someone's saying, I need a new limited company. I know that I need an SPV of sorts. I've got these 2-3 purchases on the horizon. How far before that are you looking to set that up and put the wheels in motion? It
does depend on their circumstances. So if we're doing a holdco situation, they've got existing businesses that need clearances, you need to be coming to me at least 6 to 8 weeks prior.
Okay.
If you're brand new and you've got nothing going on in terms of you haven't got any existing businesses or anything to wrap up that side, then we can get the structure done within about a week.
Okay.
So it just differs on the actual client and their background.
The key is sorting it before you've got the keys and you're saying, now I want this in a limited company, because you're going to cause all sorts of other problems for yourself.
Exactly.
That makes sense. The people who have gone with, you mentioned earlier, the sort of mentor links and some of the cheaper education blanket advice pieces outside of LLPs, is there anything that people need to listen out for as red flags and things to avoid really specifically, so they can think, no, I need proper advice on that, or that's not right?
Well, obviously we saw, it's probably about 2 years ago now, there were quite a few tax avoidance schemes that were exposed.
Yeah.
So I would say anyone who is not, if you're going to speak to an advisor and they're showing you a structure and it seems really complicated and it seems too good to be true, and they can't back it up in writing and they can't give you the implications of it, then probably don't do it.
Sure. Which feels like common sense.
It does, but, you know, you think these people have just been bamboozled on this property course. They're so excited. They're so excited. They think, I'm going to make all this money. What's the next best thing? Save loads of money as well.
Yeah.
So, like, the people's brains, oh, yeah, I'm going to make 10 grand a month. Great. So how can I keep most of that 10 grand a month? Oh, I need a tax person. Oh, I need an accountant. And that's obviously, these schemes are designed to save tax, but unfortunately a lot of them are not in a legal way.
Yeah, okay.
And the taxpayer, because the UK tax system is so complicated, they don't know what they're being told.
And it's important to point out that there are real life consequences of that, right? We did a case last year for somebody relatively high profile who'd been caught up in a scheme, who was having to offload assets like crazy because he had a retrospective, I think from memory, it was a couple of £1 million he owed to HMRC.
CGT, no doubt.
Yeah, and was in a real pickle with it, right? And that was someone who had wealth and had money and had people around him he trusted.
Yeah.
And he got led down the wrong path. So the consequences are real, right? You must see that as well.
Yes. So when all that blew up, I had quite a lot of people come to me and say, can you help me? We've had this letter from HMRC. We didn't know at the time, this, that and the other, but from HMRC's perspective, they don't really care.
I was going to say, is it too late? Or is there anything you can do to help them if people find themselves having had bad advice?
So there's a couple of things, really. So if you've got a HMRC letter, a spotlight letter they're called, the best thing you can do is cooperate with HMRC. Mm-hmm. That is the best thing you can do. If you ignore it, they're going to come down harder on you.
Yeah.
The other thing is you're probably going to have to get another advisor. We definitely will.
Yeah.
To sort it all out,
yeah.
which is a massive job in itself. And a lot of people just don't get involved because of the complexity of it. And essentially, you need to accept the situation. The only saving grace, which I don't know how well this works out, because the people that set up the schemes know what they're doing, mm-hmm. would be claiming on PI insurance. But to what extent that's actually going to be useful, we don't know. Depends on the scheme. Depends if they even had insurance. A lot of these people don't even have qualifications.
So. It's a real shame when you see that in the market across the board. Tax is an obvious one because I think some of the real world consequences are serious and financially impactful. And it's the same in our world really with mortgages, because the consequences are repossession, potentially in losing assets. But when it's bad advice, you really feel for people, and you do want to shout a bit louder about just go and talk to an expert. Right? Yeah. It's just the number one. And that doesn't necessarily mean, and it's a point that I make quite often, but you probably see it and back it up as well. The person who did your accountancy for your kitchen business, for your cookery classes, for your hairdressers, isn't necessarily the person to speak to about how to structure your property portfolio and your growing property empire, mm-hmm. because those are different disciplines. Yeah. And it's the same for us with the fantastic, lovely mortgage advisor that's looked after somebody buying their main residence for years. That doesn't mean they can deal with a mixed-use commercial or a block of flats or a complex short-term finance product for a refurbishment. So it's dealing with the right people in the right space is massively important. Do you see people trying to overstep? Feels harsh. It feels like there's more malice. I don't mean like that, but in your space, are there advisors trying to branch out into property and not really being experts? Do people fall for that?
There probably is. I mean, a lot of people come to me because their accountant, and a lot of the time, to be fair to most of the accountants that I deal with, they know they're out of their depth.
Sure, okay.
So they will say, I don't know the answer to that. You need to speak to somebody that does.
Great.
And then I will have a conversation with them. I've got a really good friend of mine who's an accountant, and we do a lot of work together because he doesn't know the property side of things. Mm-hmm. So he will just send them to me when he's got a question on it. So a lot of the people that I talk to, they do realise that they're not an expert in that area. Mm-hmm. And they tend to... It's also a form of protection because mm-hmm. if you think about it, property's really hard. If you've got a practice that's not niched into property and you're trying to answer a question or solve something that you don't really know about, there's a massive risk on you as a business owner, because if it does go wrong, it does go legal, you get a complaint or you end up having a claim on your PI insurance, it wasn't worth it. It's never worth it. So I don't think a lot of people...
Why is it so hard? You mentioned earlier that you, because clearly you're a bit of a sadistic, you like a challenge, you went for the hardest tax environment you can to build your business and your niche. Why is property so complicated?
Because it spans all taxes.
So it's cross-discipline, I guess.
It's literally everything, isn't it? So you've got income tax if you've got it in your own name, capital gains tax when you sell it in your own name, mm-hmm. you've got stamp duty when you buy it, you've got corporation tax if you buy it in a company, mm-hmm. and then you've got inheritance tax, and you've actually got VAT if you're doing conversions or, you know, whatever it might be. Which is
all the rage now as well.
Yeah.
That's a question in itself. For people that are, the modern landlord isn't just buying buy-to-lets. You alluded to it earlier. The return isn't as strong as it used to be. So people are either buying more complex assets or they are upscaling, refurbishing, building now. And people are being a bit braver with that. If I was a landlord who had owned 10 properties for a number of years, quite comfortable in my lane, trying something new, what are the tax differences of a project like that I might not be thinking about?
VAT and CIS. Depends on the scale that you do it.
Yeah.
So often I will see a portfolio landlord maybe try their hand at developments, mm-hmm. which is completely different.
Yeah.
And then I tell them about CIS. You're now a property developer as well.
Yeah.
So you need to think about construction industry scheme. Or what's that? you know, or why can I claim the VAT back now, Amy? Well, it depends. Depends on how we set it up. Depends what you're actually doing. Depends on the planning that you get on the properties. There's a whole host of different things from a tax perspective to think about when you start going down a different route.
And again, it all falls back into prep is key, isn't it?
Yeah, have the conversations. Yeah, have the conversations with your advisor before you go and put an offer in on a site.
Yeah. The market's changed loads in the last few years anyway, and people's attitudes, and we've talked about that loads. But over the next 12 months, what are some tax changes, or maybe beyond, what are some things that should be on a professional landlord's radar to bear in mind that might be changing with them from a regulatory perspective in the next year and a half? Yeah,
so I would say because of the government we've got in place now, the one thing that is for certain is uncertainty.
Yeah.
Which is as simple as I can put it.
Yeah.
Unfortunately, I don't have a crystal ball, and neither do any of the other advisors. So I would just urge landlords or anyone in property to go and have just a check-in with their advisor and say, this is my plan. Am I still in the best position from a tax perspective?
Yeah.
That's the best bit of advice that I could give, because their advisors will know from their perspective with their goals what the answer should be.
Everyone wants to avoid getting hit by the bus you see coming, right? And that's the mistake. That's criminal if that happens.
Yeah.
You want to get ahead of it. You're right, there's so much volatility from a regulation perspective, and lots of threatening as well, whispers of capital gains increasing. You never know when that'll happen or what it'll look like or whether it'll happen. So a lot to think about, I guess.
Yeah, we had a bit of that last year. And then I think the rates ended up dropping down to 24%. So the people that rushed to sell, it's like, well, why?
Yeah.
You know, I think you have to look at it from a commercial perspective as well. Like, yes, it's great to save a little bit of tax, or it might be a lot of tax, but does it actually align with what you're trying to achieve? A lot of people just get tempted by, oh, well, this is changing, now I need to do this. They'll chop and change and then go, oh, well, that wasn't the right decision. Do
you think they're falling victim to, and I'm pulling you away from tax a bit, a higher level property overview, people are falling now more and more for the get rich quick type of attitude in property, right?
I just think in general, in the UK, that's people, it's a psychology known fact, isn't it? That if they're fed that information over and over again, they start to believe it.
Yeah.
So can you blame the person?
Yeah.
You know, really, I see it all the time. Like I said to you earlier, people come to me saying, I want this 10 grand a month, but they haven't thought of how.
Why, how, what does it look like?
Why do you even want 10 grand? Like, do you even need 10 grand? Like, for your dream life, is it 10 grand? It might be 20. It might be 50. It might be 5. You know, when you start asking questions, that's usually when the truth reveals itself.
And I'm a big believer in the fact that actually, with property particularly, you know, outside of the property boom where people have made a fortune because they just happened to buy in the late 90s and now they can sell for 1 billion times more, that's great. But property's a long game, generally, and the planning all falls into that. But if a deal works for you now, and rates are in a higher space, for instance, and tax is costing you a bit more, but it is making you money and you're happy with it, then stay happy with it and ride the storm and find the benefits when they come, and interest rates might drop and tax advantages might open themselves up to you. And then you make more money as the year goes on. And then you have the ability to sell anyway and get your equity out, assuming we don't have a huge property crash, which no one can truly predict. So the long game is the better way of looking at this market, I always think, outside of the throwing money at a project that carries loads of risk.
Yeah, I would always say with anything in life, it's probably the long game that's going to pay itself off. You know, if you look at something short term, you might get great satisfaction out of it for now, but it doesn't last, and then you want to go again.
Yeah.
So you have all the stress of this deal, and you might make, I don't know, you probably make less profit than you wanted. That's the reality.
Yeah, never as good. It always costs more. Every project costs more than someone plans for, right?
Yeah. And then, you know, you've got the hype of that, and then you've got nothing else to do, and then you want to do it again. It's just, it can be a vicious cycle, in my opinion.
Yeah. So patience is the answer.
Yeah, I mean, I don't have much, but when it comes to business, when it comes to my business, it is different.
Yeah.
Because I think my issue when I was in jobs, in a career, I used to get bored so quickly. thought, oh, yeah, I'm bored now. I've done this for 2 years. Yeah, I'm done. I'm out of here. And then I'd jump, get a pay rise. And now I'm doing my business. Like, oh, I haven't got a ceiling.
Yeah.
So I'm never bored.
Yeah. In a moving landscape as well, rules have changed. People bring new projects to you. That must be quite exciting.
Yeah, absolutely.
Exciting about property tax. Yeah. Well, there it is. If a landlord could pick one thing, let's presume people aren't doing it perfectly. If a landlord could pick one thing to change this year or to look at that you think they might be missing, what would it be if we walked out of here? What would the first priority be for me as a landlord to review my tax position?
It would be structure.
Company structure.
Structure in general, company, LLP, personal, portfolio structure.
Yeah.
How are those properties structured from a tax perspective?
Is it the most tax efficient it can be?
Effectively, yeah, because the structure is the vehicle for the tax implications. So if you get the structure right, the tax implications will fall out the back of that. Yeah,
okay, that makes sense. And in terms of people generally in the marketing wanting to reach out, which I think they will after hearing a lot of sound advice, what is the best way to reach you and to find you online and to digest some more of your content?
Yeah, so on LinkedIn, I'm Amy Richardson, ACA. And on Instagram, it's at Property Tax Queen. Property Tax Queen. It's memorable. And I'm sure lots of people will be reaching out to get your advice on various things. You might get bombarded with some really stupid questions, which I'm not sorry about because I'm really grateful that you came. So thank you so much for coming and joining us. And thank you for some real pearls of wisdom. Thank you for watching as well. And we'll be back next time with some more sound advice from within the property space.